What's going on, everybody? Got another video coming at you tonight. It's about 10:30 my time. I've been working all day, barely gotten up, so I am a little tired, but I felt compelled to make this video because I was cruising Twitter as I was about to sign off my computer for the night and saw that Cathie Wood has trimmed her position in Palantir. Now, I'm sure there's going to be a lot of talk about this, especially tomorrow online once everybody starts digesting this. There's not a whole lot that I could find about it right now. I'd also be curious to see if she'll be on CNBC or anything, to comment about it. I doubt it, and here's why. I'm sure a lot of haters are going to be commenting and making, all sorts of comments that she's dumping Palantir, that she lost conviction, and that the company's growth prospects are doomed. Here's the deal. She sold about 2 million shares, give or take. That is a minute portion of her overall holding. So to say that she's lost conviction, I think would be, pretty short-sighted, to say the least. I want to actually focus this video on a couple of different dynamics here and maybe why we saw this activity. I mean, we have to remember that she's even sold Tesla before. Now, we could say that, hey, look, this is just algorithmic, it's portfolio reallocation, it reached a certain trigger point and it automatically got sold. Maybe. We also know that since Palantir released their Q3 earnings about a month ago, she has been buying the stock in droves. In fact, I think she's bought it over 10 in more than 10 trading days between when Q3 earnings were released and today. What I really want to focus on right now is actually a broader kind of dynamic that we're seeing in the markets right now. I'm personally seeing this in my own day job. Just for those out there, I lead finance for a venture-backed startup. Previously, I spent many years on the investment banking and venture capital side. I've transitioned to more of kind of a CFO track as I work for different startups in the DC area. And so I have been working with venture capitalists, private equity guys my entire career in one form or another. And what I am seeing right now, and basically what I've been seeing since COVID, is extraordinary. And what I mean by that is valuations are hyperinflated right now. We're seeing that in the stock market. We're seeing it in the private market. And there's this whole notion right now that the stock market is crashing. Investors are re-rating risk. They're concerned about inflation. They're concerned about, the Fed raising rates, which they said today they're not going to do. And all of these things that are warranted and there's merit to it, but let's just kind of, when in doubt, zoom out. Let's think about this here. I think it's fair to say that a lot of stocks benefited from COVID. I mean, we saw Teladoc, sports betting companies that went, that had a digital first offering, streaming services, Zoom, there's Peloton, there's a ton of sort of COVID stocks or stay-at-home stocks. And what this means is, it had implications with the public markets and the private markets. For the public markets, I think we saw a lot of these companies get overextended in terms of their valuation, and there were a lot of people buying at the top. It certainly didn't help that, there was the whole Wall Street bets thing, and people were, kind of YOLOing their stimulus checks into shit coins and just stay-at-home stocks, which, at an aggregate level was certainly playing a role in these increased valuations. In the private markets, when you're a private company and you're trying to raise fundraising, the board of directors, which are mainly consisted of the founders and the investor syndicate, need to come up with a valuation for your company. And one way to do that is to look at public company comparables. And so basically over the last year and a half, we've seen a ton of private companies raise, very significant equity rounds at these hyperinflated valuations of $1 billion, $5 billion, $10 billion, even more. And what we're seeing now is this sort of, I definitely don't view this as a crash in the stock market. I view it as a much needed pullback and frankly, just kind of a short-term correction. I personally believe that we are nowhere near a bubble. I think that now is the time to invest in innovation. It's no secret, I'm very straightforward on this channel. Most of my portfolio is in technology stocks. I have been buying the dip buy the dip. It's all over Twitter for the last, month to 2 months, averaging down. And maybe I should make a whole other video about this. I definitely want investors to know that you have to learn how to average up as well. I don't just wait for dips, but this was a point in time where I felt comfortable getting rid of and liquidating, sort of lower conviction holdings and reallocating to, companies that I think are now either undervalued or fairly valued that I just didn't want to buy over the last year and a half because the stock had, overextended. And maybe it could have been a good trade for me at the time, but I typically am not looking to buy for trades. I'm looking to buy for long-term investments and long-term gains. And so, getting back to the private markets here, I think we're seeing something very interesting, right? We're seeing multiples compress in the public markets, which now, if you think about it, for all those private companies that raised at $1 billion, $5 billion, $10 billion valuation last year, I would be shocked if, I'm sure a lot of them are turning to advisors, turning to their boards and saying, what do we do? I'm a $20 million SaaS business that's unprofitable, and we valued this company at 50 times revenue, so $1 billion, and I don't even have a real path to get to 100 million. I think they're kind of screwed. And what I think we're going to see is, public companies can borrow at different rates than private companies can, and they can borrow more money too, right? There's just luxuries that public companies have that private companies don't, and vice versa, to be fair. But when it comes to valuations, I personally think we're going to see a lot of private companies get gobbled up by either larger public companies or consolidation, within the private company atmosphere. And I'm not going to say that they're going to get acquired for pennies on the dollar. I'm not going to be dramatic about it, but I think that a lot of overvaluation has occurred and the market is just kind of right sizing right now. The thing is, when you're investing in public companies and public equities, this is a buying opportunity for an investor like me. When you're a private company, that valuation is basically pegged until your next round of financing. And the last thing anybody wants to do, especially a founder or an investor, is raise a subsequent round of financing at either a flat round or, God forbid, a down round. I mean, that's basically the kiss of death. And so, kind of to just wrap it up here, as it relates to Palantir, I very much do not view this as Cathie Wood losing conviction in the company. Yes, I think there are still some things the company needs to work out in terms of really bolstering its sales, kind of growth to the next level. I mean, they will grow revenue 40% year over year this year. They've committed to 30% year over year growth for the next 4 years. That is very healthy and very impressive. And as I've said in my other videos about Palantir, I actually think they are, I think that could be understated. I am a huge Palantir bull. I'll put videos about that in the description. I don't want to waste anybody's time here. But, look, I think at the end of the day, there's just too many good buying opportunities in the markets. And when you are an investor, whether you're a trader or a long-term investor, you have to be emotionless about your decisions. And so, do I view this sale by Cathie Wood as a negative? No, I don't. I view it as a way for her to raise funds to invest in other things that she sees are trading at either discounts or fair value right now. And there's only so much money, that even she has with her, pedigree and, the size that ARK has become. There's still only so much money she has to invest. And so, to me, was it a conscious decision? Was it an algorithm? I don't know. I can't say. But what I can say, with some confidence, is that I highly doubt we're going to start seeing her selling Palantir off in droves, and that this is going to be, over the next 5 to 10 trading days, we're just going to see her cut her position in half or even more. I think that this was very much like when she sold Tesla, months back. This is a combination of portfolio reallocation and a way to raise funds to invest in other high conviction plays as multiples continue to kind of compress. And companies are, especially in the tech sector, these hyper growth, high growth companies that have very good 5-year to 10-year growth prospects and, sort of growth horizons and such. There's just too many opportunities to pass up, and the money has to come from somewhere. Again, as this relates to private companies, I think that's a whole different story. I think that a lot of them are, probably overvalued right now, and there's not a whole lot that they can do about it. Unlike in the public markets, a stock could just drop, instantly. A stock could just drop 30% in one day. It could be cut in half in one day. Not as likely, just doesn't work like that when you're raising, private equity or venture capital money. So anyway, I guess to just kind of summarize here, I will be curious if she goes on TV to comment about this again. I don't think she's going to. I think this is, going to be a one-time thing. We'll see, tomorrow, maybe I'll do a follow-up video if this, happens to be kind of all the buzz on FinTwit, but it's 10:30 at night, East Coast time. The ARK kind of daily trading newsletter, came out maybe an hour ago or so. So there's probably most people haven't digested this yet, or they're still doing some research about it. I just wanted to make kind of a quick video, what my 2 cents is. Anyway, I will put some links to my Palantir videos below, as well as some of my other videos about kind of my high conviction plays. Check out my articles on the Motley Fool. I'll put a link to that in the description below. And if you could like this video, share this video. If you learned something, please comment. I do read all the comments and I try to respond to all of them. It would mean a lot to me. And if you would consider subscribing, it would really help the channel out a lot. Thanks a ton, and thanks for watching.